Here we go. Welcome Cashflow Planning webinar. This is a book I wrote, about 80 pages long, the basics of all these six. You can find this on our website. Go to bernsteinfinancial.com. Why do personal cash flow planning? Why do it in the first place? Well, the obvious one is if you're negative cash flow, you're having a problem, the first thing to do is to track it, to figure it out what's going on, what expenses are going out, what income is coming in. Some people just want to improve their cash flow. They think they might be wasting some money, and so they go through this process just to improve it from a positive cash flow to an even better cash flow. Here's where you can go to find these spreadsheets. There's a picture of your team. Okay, that's what the tab looks like when you're downloading it or going to the spreadsheets. Okay, so we're going to start with income, and that's net deposits into your personal account. And you want to list, remember, if you get paid every 2 weeks, there's going to be 2 months during the year, you're going to have 3 payments. You get 3 pay periods during 2 of the months when you get paid every 2 weeks. If you get paid half month, there'll be 2 each month, or once a month in that case, once a month. All right, here we go. So family member 1, what's your net pay for the month? It might be 2 payments, might be 1 payment. Teachers get paid once a month sometimes. And it's the net after taxes. So what's going into your bank account, that's what you want. It's a separate issue if you're owing tax every year to get the right taxes taken out. Meanwhile, what's going to your account that you could spend? Second person working in your family, what are they doing? Now, what if you're self-employed or you have an S corporation or something like that? You don't take your money evenly. Well, add it up for the year, what it usually is, divide by 12, put that number in. Okay, if you get gifts or grants, if you get dividends, bonuses, put them in, don't make it each month. On bonuses, pick the months you usually get the bonus and put the net pay in. Any of the refunds or reimbursements, you can put in miscellaneous items, maybe earning interest on an account. So get the total revenue. And here we go back. Let's go to the next page. Expenses. Okay, this is the hardest part. You got to roll up the sleeves. Don't take 7 hours to do it. Take a half an hour to an hour, do the best you can, then come back to it again for another half an hour. Otherwise, it gets too overwhelming. And so here's the expense side of things right here. I put in what the main ones are. There could be more you add in, or there might be less. So you might be renting, or maybe you have mortgage and maybe the taxes are included in the mortgage. Maybe they aren't. If they aren't, include the taxes separately, property taxes. The insurance is included. You can put it on line 1. If it's not, put down here under house insurance. Okay, fill in the ones that apply. If you rent, maybe you have home rental insurance. Put zeros where the ones that don't apply. So we have utilities, caring for the house, internet, phone, cable, vehicle expenses, cash and miscellaneous. That's not groceries. That's how much cash you take out here and there to use on whatever. And if you go through your account, I'll bet you have a lot of debits going on. You need to find out what those are, try and put them in categories. Medical, out-of-pocket medical, you may be covered on premiums, or maybe you also have health insurance premiums. You can add a line. Groceries, those should be anywhere from a single person spending $500 or $600 a month to a family with multiple children spending upwards of $2,000, $2,500 a month, depending on the number of children, what's going on. Newspaper, vacations, restaurants, entertainment, etc. Try not to leave out things. Look back a couple months at your bank statements. Try and figure this out. Because if you don't get this right, this exercise is not worthwhile. And this is the hardest part. So take your time, put these in, go back and forth a couple times, and you get total expenses, you'll get a net balance. So if we have 10,000 coming in, we have 9,000 going out, you're 1,000 positive. If you have 8,000 coming in, 9,000 coming out, you'll be minus 1,000 here. And then you just copy it over, be the same all the way through, except for the revenue. If you get paid every 2 weeks, there'll be like March and September or March and October. Well, you have 3 pay periods. You get 3 times the revenue. But the expenses should be the same all the way through. And then we'll total it over here. All right, very good. All right, so the result will be a net cash or surplus or deficit. The assets, let's move over to that. We're going to this third tab here, retirement assets. So again, checking, savings, IRA accounts, 401k accounts, put in there what the house value is. If you got a second house, a rental property, what its value is, what the car values are, all positive plus numbers here. Then you put the loans in here. Credit cards that you might have balances on, home loan, car loans, 1 and 2, consumer debt, other consumer debt or credit lines. Just list them all in here, get a total. So you're going to get total assets for today, total liabilities, and the net equity. So if this comes to $400,000 or $500,000, your total debt comes to $300,000, you're going to have 100 to 200,000 equity. Then you can try and forecast what you'd want to happen in the future, depending on your age. Put the age right up here. And it might be, if you're in your 50s, you might be looking to retire in 10 years. And we can change these dates to 3 years later, 7 years later, 10 years later. We can utilize this. Once you get this, you can start forecasting out. And when you forecast out, you get to the year you want to be. You can put dates in here. And then you'll put the final date right here, the retirement date, and what you think this will be or what you want it to be. Really, what you think it'll be, not what you want it to be, what you think it'll be. You forecast out, especially the IRA and the 401k, house values and things like that. The home loan will be coming down over the years. Where do we end up at retirement? And then we'll take the accounts that will earn income like IRAs and 401ks, and you can divide them by, you can multiply it times 5%. And how much and divide by 12, you'll get a monthly forecast of what revenue you have coming in, plus Social Security, any other income items. You'll estimate your debts out here, any expenses you'll have like home loan payments and things like that, and you'll come to a net here, how we're doing at the bottom. So once you have done all this work, now we're going to want to, I'm going to stop sharing for a moment. We're going to want to take the information that we have and start molding into what we want it to be. So the cash flow, if we don't have enough to put enough into retirement, you need to revise the cash flow so you do. If we don't have enough to buy life insurance, because that's part of our personal 4 areas we need to improve, we need to improve our cash flow so we can buy life insurance. And you mold, this is where you start to mold it to where you'll be able to achieve all your financial goals. So let's go back to start here. Let's go over some ground rules. First of all expenses and income need to be monthly. So let's say, especially expenses. So let's say you have vacations, you go on vacations a couple times a year and it costs $6,000. That's a $500 a month expense. Or let's say you pay your property tax twice per year in California, April and December. Don't put it in twice, add up the total, divide by 12, put in the amount per month. Everything should be monthly, even though you don't pay it monthly. This will give us a better idea of how much you need to set aside and how much you're spending per month so you can do your cash flow better. Okay. Don't forget entertainment, vacations, gifts, etc. They're overlooked all the time. Same thing with like business meals you go out with your family, or any case. Let's talk about the next item here is really important. Don't try and make this what you think it should be. Make it what it is. Because if you don't know where you're starting, you can't fix it. If you make it what you want it to be, then you haven't recognized the issues that are going on, be very hard to fix. There's a problem. Okay. After the spreadsheet is done, if there's a negative cash flow, don't go change it immediately. Just figure out what's going on. You know this. If you're borrowing all the time from credit cards, or you're going into credit lines and your cash flow isn't increasing in your account every month, you know you're probably negative. So figure out what the negative is, and then you can address it after that. Okay. A couple other items. No arguing and no negotiating with family members on what the number should be. So if you and your partner go to do the spreadsheet and you find you're disagreeing on what the number should be, come to a collaborative agreement or do 2 spreadsheets and put a number in there. No arguing about it. There'll be enough negotiations and discussion after it's done, let alone getting the numbers down. So again, look to history. You can look to bank statements. You can look to all their debit cards, your credit cards. You'll be gathering all this information to put it on the spreadsheet. So here, the spreadsheets also, the goal of the spreadsheet is not to say, take away all these things from you from spending. That's not the goal. The goal is to make it to work for you. If you're negative cash flow, where are the areas we can cut a little bit to try and make it positive cash flow? And if we can't, how do we restructure our lives so that you can make it on a monthly basis? It might be changing your living arrangements. It might be changing your housing. If you own a home, it might be several different things. It might be changing a job. It might be getting a second job. In any case, all those things. Okay. Now on the retirement planning side, which is the third attachment, there's information on your assets and your liabilities or debts. On this one, you want to look to your statements, your retirement statements, your bank statement, your savings statements, your home mortgage, what balance, and fill them in from those as best you can. Don't worry about getting things to the penny, not even to the dollar. Just try and get close so you can get an idea of what's going on. You'll be changing them out into the future. Okay. I've been doing this type of work for about 35 years. I bought this business from my father back in the late 80s. And ever since the beginning, I've been trying to help people with cash flow and their personal planning, in addition to doing the tax preparation and accounting work. Ernst & Financial is about 20 team members, full-time team members, equivalents, and we do taxes for about 1,500 individual clients and about 300 or 400 business clients. We also do consulting in the area of trust work and business consulting as well. In any case, today is about cash flow and retirement planning. And what I've done is created some worksheets and spreadsheets that you can help yourself. I wanted to let you know that I'll have lots of rules regarding these spreadsheets to make it easier for you and make it less stressful. So if you'll follow the rules I've set down, I think you'll find that you can work with the cash flow for yourself a lot easier. So the areas that my practice tends to cover in personal planning are cash flow planning, insurance planning, retirement planning, college planning, estate planning, and tax planning. We're not going to cover all those today. We're going to cover is cash flow planning, and then we're going to touch on retirement planning. Now, to help us do that, I'm going to also give you some visual aids. So I'll be talking about some spreadsheets, some instructions, and we'll go through a little dog and pony show here on the areas that you should look through. So I'm going to start with showing up on your screen shortly as I share the screen. Will be, first of all, family pictures, but that's not what it's about. I hope this has been helpful. I know it's going to take some work. You need to look at this video, do some work on your cash flow sheets, your retirement sheets, go back and look at the video again, come back, send us questions. I wish you luck. Take care.